Hello guys, what's up? Welcome back to my trading channel. You know all we do here is give you secrets that will help you profit from the market. So today I'm gonna be giving you one secret that you need the most. I bet most of you don't know that you need it. So today I'm going to be uncovering the benefits of using the DXY in your analysis. So most people don't know how to use the DXY to their advantage. It can help you know if it's going in a particular direction. You can know what the next pair is doing. So today I'm going to be teaching you all about using the DXY from scratch, and let's get straight to the point. So the DXY is the dollar index. Basically, it normally helps us to know the direction of the market. For example, if the DXY is going down, we are expecting that the Euro USD, GBP USD, and those types of USD pairs to be going up. So for example, let's do an analysis here, simple analysis. I was just doing my markup chart here, marking up my charts, and I realized that the dollar index is it's playing around the support area basically. So like here, let me show you using the crosshair. We can see that the DXY bounced here, it bounced here, did so here, and right now we are seeing like it's selling towards this support structure. So knowing that, we are going to be expecting that the Euro USD, GBP USD, and those type of USD pairs, they are going up. Not that I'm saying, I want you to note, I'm saying that if the DXY is going down, the XXX USD pairs, we are expecting them to be rising. Get that keenly. They are negatively correlated. If DXY is going down, XXX USD pairs, we are expecting them to buy. So let's do this practically in an analysis so you guys get the content and get what I'm saying correctly. Right here you can see we have the dollar index, it's selling, right? We have analyzed our market and it's not particularly, sorry, I like using the word particularly a lot. I'm saying we can see that the DXY is selling, right? So I had done my analysis here on H4 and I had realized some sort of a trend that will guide us. So the DXY was moving up, it was on the rise, but then you discover it had given us this particular channel. You realized we had this channel, so the DXY hit there, the first touch, second touch here, then third touch, then it played around, created another channel. Okay, the supporting trend line, we can use this as our first touch. We had a second touch here, it bounced, then came, broke out. Then what do we see now? We are seeing sells. So the more it's selling, the more I'm seeing more confluences for sales, because I realized that using the trends in trend strategy, we broke out of this trend. We have formed a new trend here. So this trend, we're expecting the DXY to probably break out of this structure, because we have our first touch here, we have our second touch. We are expecting the DXY to potentially break out here and then sell towards this level as our take profit for the 90% rule. But overall, we will be expecting to see the DXY potentially come to bounce off of this trend line here. So having known that the DXY is selling, we are going to be expecting that the Euro USD or the Euro dollar, we are going to be expecting it to buy. So for example, let's look at Euro USD. I had done my analysis and I had discovered that Euro USD was on a bullish momentum. If you check my previous analysis when I was teaching on how I was teaching people to analyze using the smartphone, we did a recent analysis of the recent piece of price action on Euro USD, and we had discovered that it was buying. So right here, we know that we are aiming for the 90% rule, right? As we know, we are aiming for the 90% rule. We had a trends in trends, so we had our first touch here, we were using this as our second touch. We have our first touch here, second touch here, so we are potentially waiting to see a third touch on this trend line. So this current piece of price action is indicating that we could potentially see the market buy and go towards this zone. We said that this will be our first take profit zone, and then for those who feel like they want to hold, they could hold for there as their second take profit zone. So the market will be moving, playing around up until we get to this point, so that it gets to complete the 90% rule of this particular channel. So right now, that's what I'm seeing on the Euro USD. I'm expecting Euro USD to be buying long term. So I guess we'll just wait and see what the market will be giving us, what it will be presenting. We'll look for proper entries. We'll look for proper entries when an opportunity arises. But so far, this is what I have on the Euro USD. The GBP USD. Let's see what the GBP USD has to say. We have these. Alright, let's just mark up our zones first. I like using the body close. I said that because even when you use the line chart, you discover that it's most precise. So there's no need of using the line chart if you are just doing it precisely. The line chart normally it observes the body close. It keeps skin to the body close so that it does the shape or turning or curve, pivot points or whatever you can call them, you want to call them. So yeah, let me do this real quick. Now we are seeing that the GBP USD has been on a bullish run. The pound dollar has been on a bullish run. So those who know my trading style, I like this candlestick a lot, this sort of presentation, because I normally call this a 3-bar reversal, where we have a bearish candle like this, another bearish hammer, and then a bullish candlestick that engulfs the hammer. This is a strong sign because it means that the market wants to reverse. If it was retesting or coming down, when you see this at a key zone, you notice that this is a key zone because the market has been bouncing at this point 2632. The market has been bouncing at this point. Now having that particular candlestick at this point, you realize that that is a very, for me it's a strong indication that the market wants to continue with the upwards momentum or the bullish momentum. So let me just lock this trend line on the daily, so we dive into the H4 and analyze what price is presenting. Alright, so here we go. Having known that we are on a bullish run, right? I know some people will want to focus from this end to this end. I guess it's how you choose and how you normally plot your trends, but for me I just want to focus on the most recent price action, so I'll just draw it here like this, and then like this. So from that I've realized that this is some sort of a rising wedge, but we are still in a bullish momentum. We have not broken out of the rising wedge. So let me lock the trend lines on H4. It's very simple to analyze from the smartphone. I think I normally prefer using my phone to analyze rather than just using laptop. So here we have these. Why this is a key zone for us, because you realize that the market block structure here, supported itself there, supported. So even now you're expecting some sort of a support structure to form at this point, and then a continuation push to the upside. So for me, this is a breakout, guys. This is a breakout. This one is a valid breakout for me. And here we go. So my overall targets will just be somewhere there. So as it is, I'm noticing that this is some form of a breakout. The market has broken out, and it will come to retest this trend line maybe here. I'm not so sure, but it might do that. So if I enter here, maybe I'll just wait for it to retrace a bit, then my entry will be somewhere here, my stop loss will be somewhere here, and then my targets will be here. That will be a good risk to reward ratio. So that's all, guys. The same goes for the euro dollar. I mentioned to you, the same goes for the euro dollar. So right now we are just expecting to see the market hit that point. That is it all for today, guys. Stay tuned and remember to like the video, comment what you want me to cover next, share the video to the person you think it might be of help to. Let's get the bag, let's get the damn bag, guys.